So guys, a wonderful good evening to everybody and welcome to our Admiral Markets webinar. It's Wednesday evening, 6 p.m. German time, master. The markets time is Marcus time, and I'm happy that you be
So guys, a wonderful
here.
Good evening to everybody
In this webinar. So I could hear my own voice here right now. So let me check the technical issues. So you have the question answer button everywhere. And so you can give me a short hint or short information. Can you hear me? Can you see me? Do you have the slide? So please, Laurencio, thank you, Dan, thank you very much. Do you have can you hear me? Can you see me? Is everything fine? So let's see. Oh, yes. So Jonas, great. Everything is fine. Wonderful. So it's the first time here we have this in Zoom. Everything is fine. Great. It works. Ziamak, we are really good. The best team ever. Thank you very much for your support. So, and we have a live stream on YouTube as well. So let's see how many people we can reach there. So let's reach the world with our webinar here. Okay, so guys, let's see. And let's start with our webinar, Master the Markets, only here in July. Then in August, we will start with another one. Okay, let's start with the risk disclaimer. You know, trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risk involved in trading. This presentation and the accompanying videos is for information and educational purposes only. So that means you are responsible for your own trading. You know the risk disclaimer between the difference between retail clients and professional clients, and why you have to choose Admiral Markets. Of course, we have the best index offerings, DAX 30, CFD mini contracts, no minimum stop distances, and so on. Okay, one world global offers. This is Admiral Markets. Welcome here to our webinar. So if you have any question, guys, the chat box is open respectively. The question and answer box is open. If you have any wishes, any criticism, and whatever you want to talk to me, you know there's no secret in trading. Let me know. We can talk about almost everything, just not my age and not my weight. That's all the other things we can talk about, whatever you want. Okay, guys, so I can see very slowly people come inside of the webinar. Great. Okay, you know, my dears, success is not a fantasy, it's a formula. So, and in my private opinion, trading must be as easy as possible, like KISS. Keep it simple, stupid. And this is what I mean, that the real challenge is taking place in your mind, because we are not made for trading, of course not, because in trading everything is based on probabilities, not guarantees, no securities, no safeties, no something else, just only probabilities. So success is not a fantasy, but it is a formula here in trading, and this is really interesting. And so Jonas, I know you're waiting for a response for your email. Give me a little bit of time. I cannot promise to you, but I have a lot of effort. I make a lot of effort that I will give you a response this evening, latest rest of the week till Friday. I hope so. So probabilities, this is trading, this is trend trading, and this is the Dow theory. Really easy. We have to realize a trend. We have to figure out where's the trend. And at the end, we have to make trades outcoming of the correction in trend direction to speculate on a trend continuation, because a trend continuation trend continuation is more likely than a trend break. So we have a probability or hit quote of 65% roundabout. And if you make sure that we have the support by the daily chart as well, we only make trades in hourly chart. It's very smooth for part-time traders, for smooth traders like me, and not day traders. I guess we have enough chances in daily chart or in hourly chart, and we can make enough money on a very smooth and soft way. Okay, I see this evening some new names, and I want to say welcome to Admiral Markets, welcome to this Master the Markets webinar, and of course, I'm not interested in that way. I'm just the presenter here. You are the one and only who is interesting for me as a coach, as a presenter, because I want to make you very successful in trading. And for that, I love and I used to talk about humanities, because I know a lot of people lose themselves in trading. They focused on catching money, get back from the market if they lost money, and so on. This is the wrong way. Believe me, there is a great way to become a successful trader, but you have to make sure that you have found your inner center, that you have found your freedom with trading, or maybe I should say despite trading. Because you know, if you have a little bit experience in trading, you know it is really hard to make money in trading, because you can stick to the rules. I hope you have rules, of course, but at the end you can stick to the rules, you can be disciplined, whatever you want, and at the end you lose money. That's really, really hard to accept. So therefore, on my homepage, my slogan, accept the inevitable things. And this is one of the inevitable things, that you can stick to the rule, that you can stick to the rules, and you can discipline as hard as you can, and at the end you will lose money. It's a part of the game. But this is a formula. This is one of the easiest formula you can use. So I can't chat with all panelists, but I love the new platform. Yeah, me too. So I only can see, I have to talk to my friend on Admiral Markets, because in a normal way, I can use the chat box in Zoom as well. But at the moment, I only can see the question and answer box. Maybe Siamak, you can check it a little bit. I don't know if you have to make me at the organization or this discussion part, but it's okay to talk about, use not the chat box, please. If you want to talk to me, please use the question and answer box. So is more easy, because I am not able to see the chat box. So maybe we'll find a solution for the next time here. But thank you, Vincenzo, that coming here on this new platform. I love Zoom as well, the best webinar platform ever. Okay, let's see. This is my trading approach. This is trend trading with based on the Dow theory. Charles Dow published it in 1879, roundabouts, and he figured out that a trend continuation is more likely than a trend break. So it's one of the easiest trading approaches ever. All the other things are happening in your mind and in your mindset. So based on that, we have our rules, of course, and rule number 1 to 4 describe where we are, how we can get into the market, and rule number 5 to 7 describe where we are. So my own mentor, of course, I have a mentor as well. His name is Michael Vogt. It's a German, wonderful man, wonderful guy, amazing human guy, and he's my own mentor. He wrote a bestseller, a book about the Dow theory. And once he said to me, Markus, the where in the market is so much more interesting and much more important than how you can get into the market. So where is much more important than the how you can get into the market. So therefore, rule number 5 to 7 is just not a real rule. It's just an advice. It's just a red line. So outside of the fair value zone, we use market profile, Fibonacci, and we use the big picture to figure out where we are in the market. So, and that's the end. Okay, here we go. And rule number 1 to 4 describe how we can get into market. So this is really easy. You can see this is a template. It's a formula. It's rather a template. And this is the point why you shouldn't have a preferred market. Because if you have a preferred market, I guess it's really hard. Because you get into actionism. Because if you have only one market, you want to watch, and you have a template and the template doesn't fit, you are in a real danger to switch your rules. And the main thing, you want to make a trade, but your rule don't fit. And if you have one market, it's bad because you landed in actionism, and this is the really, really bad part. So it's better you have a real list of markets, maybe a Forex list like me, I will show you, and you have your templates and you can see this is a formula. Do it fit? Oh, does it fit? It's okay. It doesn't fit, switch it away, next market. So we prepare the week and we prepare our markets, our trades in that way. And so this is really easy. So you don't have to spend too much time for trading if you use that rules. So you can see, does it fit? It's okay, make your trade. Doesn't fit, don't make your trades. Not much time for your trading, because I want to ask you, and maybe all trend arms have to correct 38%. Yes, Dan, absolutely. If you want to come out of the correction, this is rule number 3, you can see it. The correction has to run at least 38%. So then a valid trend is needed, of course, you can see it. And then we use Heikinashi. Heikinashi it's an expression form, how look like the charts or look like the candles, and it's really easy. So we use a Heikinashi balance candle. It means a balance between supply and demand. Okay, let's see. And you can see we have 3 templates we can use for our daily chart. So that we have a support by the daily chart, either we have a trend or we have a divergence on the lower or the upper side. So that means the trend comes to an end, or we have template number 3, we have a support or a resist to the close to the current price, and we can use it for our hourly chart. Or sometimes, and with this trade we will start, we have a big chance in daily chart. So let's see. Look at this one. First of all, and I want to start with a view at the, let's say it's the wrong one. So I want to start with here a trading idea in US dollar Japanese yen. And thanks, Dan, for asking. So let it see it's a template, it's an example. Then ask me. So you can ask me whatever you want. The question, the answer and question box is open because there are no secrets. I want to share everything with you guys. I have 20 years experience in this trading stuff right now, and it would be nice to share my thoughts with you. But ask me whatever you want. It's open here, and I love to use that in Zoom. Okay, let's see how we can use that situation. So you see, first of all, we have a trend. Just a moment, I can make a little bit this one. So this is too small. So I will draw the trend for you. We start at the lowest point, movement. So in that point, you can see how I see the trend, correction, then the trend. So now remember rule number one, we need a trend. You remember, rule number one, we need a trend. Do we have a trend right now? Yes, we do. And now we are in a correction. So you see, in the correction, and at the best, we are deep in the green zone. That means green zone is an unfair value price zone. You see, I use this market profile indicator and the fairest price in the daily chart to back to the last 660 candles means it's placed at 110 Japanese yen, around 111, roundabout. Actually, we are at roundabout 108, so we have a lot of space to go, because that's the behavior of every kind of prices. Prices have the behavior to go back to the fair price. Sometimes it's too cheap. We have special offers, like in a store. And sometimes we have prices that are too expensive. If we are outside of the season, for example, maybe you know that example. But a special offer never will remain for a long time, maybe for 1 week or 2 weeks or something else. And then a special offer is over. And after that, it costs a normal price. And sometimes it's outside of the season, the price is too expensive, but then the season comes and you see the price go back to the fair price. And most of the years, we have a fair price. But the price have to behave. Prices have, it's more than one, prices have the behavior. And I have to say, I apologize, I'm a German guy, so my English is German as well. But I make a lot of effort here to can understand me. And if not, then let me know. I will describe it with other words. Sometimes I don't find the real words, and sometimes I miss the grammar. But most of the times, I think you can understand me. Thanks for your attention. Thanks for your patience. Yes, and your mercy, of course. Okay, so now see our rules here. This is, we don't have to switch to the hourly chart. We have a great chance in daily chart. So how we can use it? Of course, we have our trend now, and now we measure by Fibonacci the last move. We start at the last 0.3 up to the last 0.2. Now you can see, we reacted, we corrected. Let's see. Just a moment. So down here. So you see that the correction ran down almost to 78%. So rule number 3 fits there. Correction at least 38%. We have 68%. So our first target, I always work with 2 targets. The first target is the deeper the correction is running, the closer my first target is placed. So we have a correction down to 78. My first target is placed here at the 727 extended version. So, and there is my first target placed. So you see, first of all, we figured out where we are in the market. Where we are means we are really deep in the green zone, far away from the fairest price. Point of control is it called. Now we have to go up. We have a trend, rule number 1. Rule number 2, a young trend. Rule number 3, the correction has to run at least 38%. We have. And rule number 4, we need a balanced candle. Look at this one. We have a balanced candle here. Yesterday, it was a balanced candle after 4 days falling prices. Then we have a balanced candle here yesterday. And now we use this balanced candle to go into the market. And you see, I placed my pending long by stop buy order at 108 round 40. My stop loss is placed at 106.77 below this point, the last low here. Let me explain something to you. In a normal way, so where is my pointing? So let's see. In trend trading, it's easy to count. So look at this one. If you start to draw the trend, it's number 1. A high in an uptrend, the current high or the temporary high is number 2. Correction point is number 3. And it's enough. You can count 1, 2, 3, not 5, 6, 7. It's enough to count 1, 2, 3. So next high is again 0.2. And now we have 3, but not a real 3 because it's with a question sign. So in a normal way, I would place my real stop here at this 0.3. So maybe you ask me, or you have in your mind, why do I place my real stop deeper? Money management, of course. But I know after so many times, so many years of experience, the market tries very often to figure out if there will come more sellers into the market. So I know sometimes they make spikes. How many of you made the experience that you have placed your stop, the market goes there, make a spike, get you out of the market, market covers, and go in the direction you wanted to go? How many of you make this experience? I guess all of you knows that experience. And it's so bad. It's so terrible. It makes me it makes you so angry and getting rage and so on. But it's part of the game. Therefore, my clients and me, and I teach them, please put your real stop based on your money management, never more than 1% of your current account size, not the equity, not the current size, 1%, no more. And then your mental stop, or I call it soft stop. Only I know this soft stop. The real stop is placed deeper, the market knows and my broker knows. But the normal stop must be placed below the last 0.3. Why? Let's see. The last correction zone is placed below or in a space between the previous 0.2 and the last 0.3. If the price will go down with the close below the last 0.3, it means 107.46 roundabout, and you have a close here below that 0.3, then you have a trend break. So we are trend trader. And if you don't have a trend anymore, the trend is over, the trade is over. The trading idea is gone. It's over and out. That's the reason why your stop must be placed below, in an uptrend, of course, below the last 0.3. This is why the webinar is called Master the Markets. You don't have to do that what everybody is doing in the market. Be smart in trading. Learn how the market works in trading. This is really, really important, guys. So put your real stop lower, but never in that spot where it has to be. So the stop has to be there, because if you have a close below that, the trend is over, the trend is broken, the idea is over and out. So, but put your soft stop there. So and it's really easy. It's a daily chart. It's enough if you have a look on it once a day at the evening, then you can see what happened. So it's really smooth trading and you can make a lot of money. So, but why, I ask you, why do you see here the point number 3 with a question sign? It's really easy, because you actually, this is the last low about this correction here. So just a moment. This is the last low about the correction here. But I cannot know yet if we won't get a deeper low in this correction. Therefore, we have number 3 with a question sign. Only we will see only we will see the next move to the upper side with the close above the last point 2. Then we have real point 3, but not yet, because it could be happen that we will see the next days a deeper low or maybe a trend break. I hope not, but we will see. The probabilities are more on our side. I hope it was understandable for you and you can understand why we have to work in that way. So this is a great trading idea in US dollar, Japanese yen. Okay, so at the moment we have to talk about a very bad trade as well. So I'm not one of the presenters or traders who only talk about wonderful trading and everything is fine in trading. No, it's not. Of course, it's not. Not everything is fine in trading. Believe me, it's a hard thing in trading, and it's really, really hard to become successful in trading. But it's possible, of course, if you stick to the rules and if you find your freedom with trading. So let's see what we do here in Euro Swiss franc. So you see, our trading idea when we started this trading was this here. We had one of our templates in daily chart. Maybe you remember we have 3 templates: a trend, a divergence, or a support, or a great support or resist close to the current price. When we start this trading, we saw this one. We have this lower low here in chart from June to end of June, a lower low. You see in the green arrow here. And we had a divergence. And divergences are a really strong technical signal in trading. And you see, after that, we had a balance candle. That means, okay, the movement comes to an end. And this situation we have to use in hourly chart. Now you can see the trade started, but now the price come back. So, but the trend is still working. So you see this one. We had this trend. I drew it for you here. We got into the trade here at 1:11:26. This was at the beginning of July. I guess almost 2 weeks ago. So the trade started, but here you can see, therefore, my stop was placed on the list below this last low here. And now you can see I'm still engaged in that trade because maybe the trend were broken here. At this point, at this point, 1:10.81. But here, actually, I could see after that we had a stabilization here in this big support zone. Therefore, I decided for my own trading, I wouldn't delete or quit this trade because I could see we have a stabilization here at the point of low here and this support zone here. And now I can see we have a new trend, a new uptrend. Let me draw it for you again. So here you see this one, movement. So you can see my view at the chart, at the trend, correction, then the move, and here the correction. Now, so you see we had one balance candle, and this is a great example for you that you don't have to go into the market by market orders, only with pending orders, always with pending orders. So if you see a balance candle, place your pending orders above in long and below in short, above this balance candles, and let a little bit space here, so that you don't get into the market by an accident. only if the price will really go up for you. So now you can see we have more falling prices. Let's see about Fibonacci. We measures the last, we want to measure the last move from the last 0.3 up to the last 0.2. And now you see we are exactly around the 61% of Fibonacci. It's a real interesting price. So, and now if we will have a close or the next balance candle around the 61, it's next great trading idea here that you have your first target here on the upper side. That's the extended version of 61. You see, guys, it's really easy. Trading must not be a rocket science. Realize your trade, your trend, figure out your trend, stick to the rules. This is one setup. Maybe in the future, in next webinars, we can talk about other setups. But this is one easy setup, how you can work in the market. So an advantage point for us is now for a re-entry, if you don't engage in that trade, you see we have a double bottom. It's really interesting. This is a great support zone. This double bottom here in daily chart means we have a great support zone here. That means more buyers come into the market than sellers. And today it seems we will get a balanced candle here. Okay, the body is still red, but it's not the problem about the color of the body. You see, it's a small body if you compare it with the previous candle, and to have a big shadow on the upper and the lower side. This means it is a balanced candle. And of course, what you see additionally, look at this one. You see this double bottom, and this is an interesting point. You see here another divergence. Oh, this is great. And of course, the seasonals shows us higher prices next day as well. So we have so many benefits about the daily chart. We have to use it in the hourly chart. So you see, now we have to wait for the next balance candle in Euro Swiss franc, and then we can think about a long trade again up to 61% of Fibonacci. And the second trade, second target, the market will decide how much money we will get here in the trend, in this trade. Okay, guys, I want to show you another one. And this is, let's see, I have to see it here. Yes, another trading idea I want to show you is Euro against Canadian dollar. And this is my working style, and I can propose to you the same one. Use, first of all, a view at the daily chart. Always realize and make sure that you have the support by the daily chart. So here we go. This is our daily chart. Ask yourself always, where are you in the market? Therefore, I use this market profile indicator because with this market profile order, you will not stumble blind in the market anymore. So you know where are you in the market. So, and look at this one. We have a great and a big divergence here on the lower side. And of course, you see, I will make it visible for you. Connect the last lows. You see a lower low, but here in the let's see, in a divergence here on the RSI, you see it's gonna be a higher low. This is a small divergence in the daily chart. This is great, guys. And we are in the green zone. Of course, we are far away from the point of control, so we have a lot of space to go. We are actually at 146, and the point of control is placed at 150 or almost 51. So we have almost 500 pips to go. This is a lot of space, guys. And now we want to wait for the next balance candle that we can see. Okay, there won't come more sellers into the market, and with this insights we can choose to the hourly chart if we will find there a trading idea in the hourly chart. So let's see. And here, guys, we have to stick to our rules, of course. So first of all, the very good point is we are deep in the green zone. So the point of control in hourly chart is placed at 150.64, almost the same like in daily chart, you remember. Now we are at 46, 146, we have 500 pips to go. But remember our rules. Rule number one, we need a trend. So do we have a trend? No, we don't. So we have a move. We have less correction. Now here, just a moment, please. I have to, this one. Okay, so what do we need for a real trend? So we have the move, we have the last point 2. Let's see, here is the last point 2. You see? Come on. No, this one. Yeah, so this is point number 2. And we'll make it visible for you. This is number 1. Not 12, this is number 1. So you see, this is number 1. And now it's interesting. So this is number 3, actually, with a question sign. Why with a question sign? Because we don't have a trend. We must expect that the correction is not coming to an end right now. Maybe we will see deeper prices. Then we have the switch, the point number 3, where we'll see the next low, maybe again here. But why is it a question sign? Because you cannot know is it the last low? You cannot know. And as long as we don't have a trend continuation to the upper side, as long as we don't have a trend continuation to the upper side with a close above the last point 2, we don't have a trend. And as long as we don't have a new trend, it is the question sign. At that moment, we will have a close below that last point 2 here. Then we have a trend continuation. Oh, come on. It's not so easy with the MetaTrader to draw it here. So if we will have a close above the last point 2, then we have a trend. Then it is the real point 3 without the question sign. And then we will have a trend. And this is rule number 1. Wait for the trend. And then wait for the next correction. Maybe here. It's just a wish concept right now. It's just only a wish. Then we need rule number 3, you know, wait for at least 38%, and then balance candle, and then go up. So that's the reason why you have to put it on your watch list, Euro, Canadian, dollar. Which are the fourth arm of the trends. So if you would draw it further then, so this is one movement, one correction. This is one trend arm. The next movement and the next correction is arm number 2. So one movement and one correction then is one trend arm. Is that understandable? Please give me a yes or no. One movement and one correction is is a trend arm, one trend arm. So, and I would make a new trading idea. Which are the fourth arm of the trend? I don't have one here at the moment, because maybe you can see it here a little bit. So let's see. Let's start here. Maybe this one. So this is arm number 1. This is number 2. This is number 3. And this is number 4. So you can see, you can count 1, 2, 3, 4. So in that point, it goes more down, 5, 6, and over and out. So here we had the trend break. So this was number 5, and this is number 6. So it's that is what you have to learn, how you can draw the trends and how you can recognize the real trend or the leading trend. It's not so easy, but this is a part of my Dahao family, of my trading education service. You talk German and English as well there. And there you can learn how you can draw a trend. It's not so easy, but you can learn it, and you have to learn it because you have to figure out what is your leading trend. This is really, really important, guys. So, and now we have the first trend arm, and we are waiting for the next trend arm that we will have a trend, of course. So put it on your watch list for the next one. So the next one I want to talk to you is, or the last one for today, is British pound to the Swiss franc again. Because maybe you remember we tried it again, but here we have the same situation than in Euro Canadian dollar. Look at this one in the daily chart. So you could see this support zone didn't work. It's over. So you can delete it because it didn't work. Delete it here. So now we had a trend continuation to the lower side. And look at this one. It's really important. Again, a divergence. Connect the last lows to each other. Move a lower low, and here you can see you have a divergence cause a higher low here. And of course, we expect about the seasonals, a little bit higher prices next days. So maybe we will see here a next balance candle, and then we can switch to the hourly chart here. So do we have a trend here right now? No. I guess we don't, guys. Actually, we don't. So here we go. Let's figure out. At the moment, we have a movement. Then we had a 100% correction. And now we are on track to create a new trend. So that's the high. But actually we have to figure out, did we or do we have a close above the last 0.2? At the moment, maybe, but not yet. But if we will see a price below that 0.2, so let me draw it. This is point number 2 again. So this is point number 2. Here we will have point number 3. At the moment, with a question sign. And now we have to wait. Actually, we have a price at 122.91. It looks like really good. So we will have a close at the next point. Then we have a trend. And then we have to wait. Do you use regular candles? No, Dan. I only work with Heikinashi. And Heikinashi you can find in every MetaTrader. Here in the indicator or in the navigator, you can see it. You have where we are, under Heikinashi. I don't use, because in Heikinashi it's really easy. Either you have a trend continuation candle, it means a strong body, a big body, and one shadow on the lower side or on the upper side for a long trend, or you have a balanced candle. And you have more, it's more valuable because you have more insights. With a balanced candle, one candle in Heikinashi means two candles. That means in one candle you have the insights of high, low, open, close of the previous candle and the current candle. So that means you can see if you have a trend or you have a balance. And balanced candles is really easy and really easy to see and really important to know, because it means you have a balance of supply and demand. That's the reason why I use Heikinashi. I love easy trading because the real challenge is taking place in your mind, of course. So I use Heikinashi candles here. So, and then you have to wait. Where is the last or the next point two maybe? Let's see. Maybe here. I don't know yet. We have to wait if the hour is the top of the hour. And then, of course, next one, measure the next move. Where is the next high? We will see then. And then the next correction, at least 38%, guys, and then go up. So we have a lot of space to go up to the last point, to the point of control, of course. So don't miss this trading chance, please, for the next days. British pound, Swiss franc again. That was everything, guys. I want to say thank you again for your attention, for your lifetime, of course. I hope you learned a little bit about your trading approach, about this really easy trading approach. And I hope we will see each other next week on Wednesday again for the next Master the Markets webinar. I say thank you to my friend of Admiral Markets for opening this webinar. I wish you a great evening. And if you have any questions, send me an email wherever you want. And we can talk to each other wherever and whenever, whatever and whenever you want. So enjoy the rest of your time and be careful about your thoughts, because you know they're the beginning of your actions. Bye-bye.